As the 2024 presidential election approaches, high-profile investors and economists are weighing in on the possible outcomes and how they might affect the U.S. economy. But one billionaire's bold prediction has taken the financial world by storm. John Paulson, the hedge fund titan famous for predicting the 2007 subprime mortgage crisis, has made a shocking declaration that has rattled Wall Street. If Vice President Kamala Harris wins the election, Paulson says he's pulling all his money out of the stock market and making an unprecedented financial shift. His plan? Cash in gold. Here's why this billionaire visionary is sounding the alarm on a Harris presidency and what it could mean for the financial markets. John Paulson, a financial legend whose net worth sits at an estimated $3.8 billion, stunned audiences during an appearance on Fox Business The Claman Countdown when he revealed his intention to divest from the stock market if Kamala Harris secures the presidency. Known for his prophetic bet against the U.S. housing market in 2007, Paulson's latest statement has raised eyebrows across the investment community. The billionaire investor's fear stems from Harris's proposed economic policies, which he believes will generate severe market instability. According to Paulson, if Harris wins, he plans to move his money out of stocks and into safer assets like gold and cash to shield his wealth from what he predicts will be a financial storm. Paulson didn't mince words during the interview, outlining his concerns over Harris's economic platform, particularly her tax policies. If elected, Harris plans to let Trump's 2017 tax cuts expire, a move Paulson believes would disrupt market confidence. He noted that former President Trump's tax cuts were beneficial for the average American, with real wages increasing by 6.5% during his time in office. In contrast, Paulson warned that Harris's tax hikes, especially her proposal to raise corporate taxes from 21% to 28% and the capital gains tax from 20% to 28%, would spook investors and lead to widespread selling. Perhaps the most controversial element of Harris's plan is her proposal to impose a 25% tax on unrealized gains for individuals earning $100 million or more annually. Paulson was quick to point out that such a measure would be catastrophic for major investors, stating that the sell-off of assets, stocks, bonds, homes, and even art would be swift and far-reaching. "I think it would result in a crash in the markets and an immediate, pretty quick recession," Paulson warned. He likened this scenario to the market panic that some investors experienced during Barack Obama's election in 2008. At the time, many feared Obama's economic policies would tank the stock market, but their decision to pull out proved misguided as stocks continued to perform well. However, Paulson argued that timing is everything, and he isn't willing to take any chances in the face of what he sees as significant uncertainty under a Harris administration. Adding fuel to Paulson's warning is another financial heavyweight, J.P. Morgan Chase CEO Jamie Dimon, who recently said he wouldn't rule out an economic scenario worse than a recession, stagflation. Dimon's concerns about rising inflation, slower growth, and increased unemployment echo the fears Paulson has about Harris's potential economic policies. Stagflation, a phenomenon last seen in the 1970s, would hit the U.S. economy hard, reducing stock values and decimating retirement savings like 401k accounts. Dimon also hinted that a hard landing, an abrupt slowdown in the economy after a period of growth, could be a likely outcome if Harris takes office, compounding Paulson's fears. The combination of stagflation and a potential market crash could bring about an economic situation worse than the 2008 recession, with serious long-term consequences for investors. However, not all analysts agree with Paulson's gloomy outlook. Some economists, like those at Goldman Sachs, argue that a Harris presidency could actually stimulate job growth and provide relief to small businesses and the middle class. Goldman's analysis suggests that a Democratic win in 2024 could create 30,000 more jobs per month than under Republican leadership. They believe that Harris's policies, including tax credits for startups and investment in renewable energy, could drive consumer spending and benefit key sectors of the economy, including infrastructure. Despite these more optimistic projections, Paulson remains unconvinced. His belief that Harris's economic policies would stifle growth and trigger an investor panic aligns with other conservative voices in the financial world. For Paulson, it's about protecting his fortune from what he sees as the inevitable turbulence of a Harris-led economy. As the 2024 election looms, investors are grappling with the potential economic outcomes of a Kamala Harris presidency. While some, like John Paulson, are preparing for a drastic move to avoid what they predict will be a market crash, others, including analysts at Goldman Sachs, are more hopeful about the long-term prospects. With predictions ranging from job growth and a soft landing to stagflation and recession, the financial future of the U.S. hinges on the outcome of this highly anticipated election. For now, the world watches as billionaires like Paulson make their financial bets and brace for what's to come.